Good morning, story traders. It's Monday, May 5th, and boy, do we have an earnings bonanza for you. So much news, so much going on. Of course, there was a big Apple one, but I got like 8, 9, 10 of them to go over with you, along with some actionable trade ideas. First, let's take a quick look at the banks, quick, because actually I think the earnings reports are more important. But you'll see that the banks are all up huge and carries up 4%. However, I will note, I haven't found any specific news about this that's causing this. But I will note, for example, if you pull up PACW, pull up a 5-day chart, it's really nothing to write home about, right? To me, this is like a 0% move. It hasn't done anything. It's still within yesterday's range. So, okay, so be careful about interpreting that. I will say, I don't know what's going on today. There's some crazy action this morning, and I don't know the reasons yet. We see gold down 1.87%. We see UUP up. That's a proxy for interest rate expectations. So that's curious. So I'm not sure what to make of what's going on here. So we're just going to focus. Why is coin down here? Why are these stocks down here? All right, we got some stocks that shouldn't be in here. We got to clear out this list. Square and Coin. That's why I was getting news on those stocks on my bank news feed. That was weird this morning. Okay, so let's go to our morning show. First, I want to point out Carvana. If you listened to the post-market wrap yesterday, you'd know that I was looking at this for a possible short squeeze to $10 and $15 with the two targets. So it broke out of 10 this morning. Now, I'll be careful. This is like 51% short. I'm seeing estimates of 65% short of the free float. They had what looks like a great report. Okay, if you look at the title of their press release, really kind of pumpy title. Let's see if we can find it. Carvana reports best first quarter in company history for adjusted EBITDA and total gross profit per unit. Okay. So on the backs of that, this thing is running and shorts are covering. But I did a lot of research on this, and I could be wrong. My personal opinion is this is a lot of like accounting shenanigans, let's call it. That it's not real profit, that they're moved stuff around, and the adjusted EBITDA is better, but other metrics related to their debt and their interest payments are much worse, and they're still heading towards bankruptcy. That being said, look, they were heading to bankruptcy back here too. Well, so the market thought, went over from $6 to $20 in like a few days. So 10 to 15, very possible in a short squeeze, but I'm not sold on the fundamentals. Because of that, I don't have a position in here. I did trade it last night and after hours a little bit. Made some money, sold it early pre-market this morning, made some money. That's fine. It can easily go to 15 and 10 is your support. There's a 1085 here. It's got to break. But again, I'm not sold on the fundamentals of this. Draw your attention to about minute 32 on the conference call. Very suspicious exchange by an analyst and the CEO, and how they basically said their profit was discovered after the quarter ended, because they were saying, the analyst was like, how did you do such a big beat? Because when he gave guidance last quarter, there were only a few days left in the quarter. How did this happen? And the answer was, well, after the quarter ended, based on some sort of accounting thing that we discovered, you were able to show this profit. It was crazy. And he was so nervous when the CEO was answering that one particular question. The rest of the conference call, he was all very confident and hunky-dory, and they went off their script. So, but in any case, it's a very interesting story. There's a reason why there's 51% short. It could easily go to 15. It's a lottery today. All right. Do what you want with that. Apple's up to 2.5%. But I will note on the 5-day chart, noting that their revenue expectations for Q2 is $5 billion lower than analyst estimates, but no one cares. I think this is simply, again, it's just a flight to safety and the strong balance sheet. They're doing the buybacks. They're upping the dividend. But this stock is expensive. I got to be honest with you. It's like a 30 PE, and their earnings are declining. Their revenue is declining. So to me, I don't know. I could be wrong, but I'm thinking that this is kind of we're entering like the last. One of the things that I've been noticing on a lot of these earnings reports is that Q2 is down. Expectations for revenue are dropping. We're in the middle of a drop right now. And I think it may be like a severe drop that's happening between Q1 and Q2 in terms of revenue. I forgot which companies I've been noting them as we were going through the week, but lots of situations where Q1 is a big beat, Q2 revenue guide down. Lots of situations like that. In fact, another one from CTLP that came out today, Big beat on CTLP. We'll go back to the big caps in a second. But big beat on CTLP. It was 9 cents versus 4 cents. Heck, if you annualize that, that's 36 cents. Slap a 20 PE on that, that's $7, right? So I don't know. Could this move to the 200-week moving average at a little over $7? Maybe. But what I'll tell you is their guidance, if you do the math on it, it's not obvious at first. They gave full year guidance estimate. And if you do the math on that, you can extrapolate what the guidance is for Q2. And the guidance for Q2 is lower than analyst estimates and represents a sequential drop in earnings and I believe and in revenue as well. So I'm seeing a lot of companies that are doing great in Q1. And by the way, a lot of the companies that are doing great in Q1, it's because of cost cutting. Here's another one, case in point, Coin, this move is because of cost cutting. And I don't think this is also within the 5-day range. So I'm not sure that this is something, oh my gosh, we're breaking out. And who knows, maybe it goes to the 20 DMA at $59. But I'm personally not impressed with these earnings so far, whether it's Coin or Apple or Carvana. And Square, by the way, they did have a nice beat and they also raised full year, but they raised full year by 3%. Okay. To me, that's not something that's like, oh my gosh, here's a re-rating play that we can play. All right. So I'm not impressed yet by any of these earnings reports. Clearfield. Oh, thank God we don't own this in our in the hedge fund I'm part of, but I do own it in my IRA, unfortunately. But Clearfield was a big dump. Oh my gosh, these guys are in trouble, man. I don't know. There was a bear report on this from like last year, right here. You see this spike down, and they were absolutely right. Their thesis was that this whole run up, all their business was because of COVID. And they're right. And now they basically admitted it for the first time in the earnings report. They said, in retrospect, all that business we had was because of COVID. And man, they raised money at $100, and this thing's at $30, and the CEO's probably losing some credibility here. So Clearfield looks cheap, even with the reduced guidance. You know, we're talking about like a 10 to 15 PE with a lot of cash. So definitely looks like a value play. Is it a value trap? There's also, again, that sentiment of management credibility. I'm staying away from this. Okay. Anyway, staying away from that. DermTech. I was watching this. I listened to the conference call, and DermTech, I'm looking for a revenue inflection. Not happening. Not only did it not happen yet, but I didn't like at all the commentary they gave on the conference call that basically they're not focusing on growth this year. They're focusing on like profitability or something. I'm like, just take a look at it. It's not exciting. They're not inflecting to revenue growth yet. They're going to have to raise money later this year. They have like 3 quarters of cash left, maybe 4 quarters of cash left, something like that. They claim they have like 6 quarters of cash left, but an analyst actually asked about that. Like, how do you have 6 quarters of cash left? Like based on your guidance, how's that happening? So I don't know. I'm not too impressed with DermTech. So off my list. Okay. We'll wait till next quarter. Okay. And we'll see. We'll continue monitoring this quarter by quarter for that inflection point to see if this can be the next Exact Sciences, but not yet. Okay. We talked about CTLP. Now, DraftKings, big beat, and I think they raised as well. But here's one that I can't do the math on this because they're not profitable yet and they're losing a lot of money. So this is not my forte in terms of re-rating plays. But I will note that this is a new 52-week high on DraftKings. So that's pretty significant. Nice, big W bottoming pattern here on the daily chart. Or is that the weekly? I think it's a weekly. Yeah. Nice big W there on the weekly. And now it's breaking out of that to new 52-week highs. So I'm not chasing it because I can't do the math on this one. I care about fundamentals. But I will tell you that here's a sympathy play. Yesterday, we had a sympathy play after it was Shop and GLBE. So you can see GLBE had a big move yesterday because of the Shop earnings. And here is SRAD. So I think SRAD can have a big move today based on DraftKings. And if you look, I think they're like the technology provider for DraftKings and other betting sites. So I would think that this stock, DraftKings did a 52-week high. I'm not going to say this stock deserves to be at a 52-week high yet because they report next week. Let's see what they report. But should it be at a 6-month high today based off DraftKings? I think that's in the cards. So I think there's a possibility here that we can go to 13 to 1360 today on SRAD, so watch out for that. PERI, okay, has been beaten down after earnings, but I got a prediction for you, all right? Patterns matter, and I found the reason for the patterns too, I believe. Last quarter, when they beat analyst estimates and they did real well here, you can see this candle. They were down sharply right there on February 8th, down sharply. Then the next day, they were about flat, February 9th. Then 2 days later, they started moving with a big open green candle. And then 3 days later, it really started moving. Two more, for the next few days. Went up, it made back all its losses, went higher, and eventually went much higher. What could be the reason for that? Well, I think I found the reason. I said this yesterday, if you're paying attention. But PERI, for their conference calls, they don't use the same system everyone else does, which makes the conference call available pretty much instantly afterwards, and it makes transcripts of the call available by Seeking Alpha and all the other resources by later that day. That didn't happen here because they didn't use the typical systems. They used a Zoom call. They had a Zoom call, a Zoom webinar format for their earnings call. And internally, then they process that and then they upload the recording. And that didn't happen till the next day, till yesterday morning. And yesterday morning, the transcript still wasn't even available. So I was actually listening to the conference call shortly after it became available yesterday morning. And I don't know, maybe you think I'm reading too much into it, but look, you see this little pop here yesterday at like 10:55, 11. I'm like listening to the conference call, like basically as soon as it became available. And I'm like, a lot of other analysts are listening to this for the first time. So the conference call was awesome. And I'll tell you, ChatGPT is not built into their guidance at all. Yet they benefit directly from growth in Bing, right? So there's, in addition to the guidance increase that they had for the year, which I forgot what the percentage increase was. I think it was 3%. They increased their guide by 3%. Did not include Bing, and just like last time. Now I think there were day two after the earnings report. I think we're going to start seeing buying come in today, and maybe that'll accelerate going into Monday. So, and then my target would be back here at like, hopefully get back to like 36, 37, and we'll take it from there. So PERI, I'm real optimistic about today. AUGX, we've had this for a few days. It's on our radar. We interviewed Rex on it yesterday. He gave us a great chart analysis. By the way, he also gave us a great chart analysis on Atom. So based on that analysis, I actually sold our Atom and we rotated into more AUGX. And so AUGX here looks like it's really breaking out. Closed strong at the end of the day on big volume at $3.25. It's not showing here. And after, right at 4 p.m., there was a big print, like 40,000 shares, the biggest print of the day, the biggest candle of the day at $3.25, right at the high. This to me looks like a cup is forming. I think this is going to break out, target 340 initially, and then looking for then after that, a cup breakout to like $3.70 to $4. That's what I'm hoping for on AUGX. And you should, if you're following us here at StoryTrading, you should already know what the thesis is. And by the way, if you're watching the replay of this later today, and if you want to get these in real time, you can join at storytrading.com/app. All right. So what else do we have? AUGX. The other one, TPCS, is on the NASDAQ today. No chart, no data. I can't really show you anything. But potentially, this stock is going to see an increase in share price today based on the fact that more people can buy the stock. Simple as that. All right. Unfortunately, I don't have a chart analysis, but I think there's an opportunity here today, potentially on TPCS, if you can get in at the right price. I want to mention DRIO because DRIO actually broke over the 20 DMA after recent financing. And we've seen time and time again that when you do a financing like we had with LILM, right, when you say, okay, we raise money and it may be enough to get us to the other side without raising more money, right, then they will need more cash, by the way, LILM. But they're saying that more cash will be given to them by their customers. Now, reach the first target of 20 DMA, reach the second target at the 50 DMA. Could this actually potentially break out of the 50 DMA and go towards one? It's in the cards. I'm just illustrating that when you raise money and it's enough to get you to the other side, that's an inflection point for stocks. Now, DRIO didn't specifically say, though, that it's enough to get them to the other side. So maybe 20 DMA, and we do have that catalyst of at least the runway goes to like the end of 2025, something like that, I think is what they said. So this potentially can make a move towards 395 today. That's on DRIO. And I want to remind you, Celsius earnings are next Tuesday afternoon. And this one, you can see it very clearly. 3 inside candles consolidating, looking for a breakout probably after the earnings report. But if there's a leak, or there's a lot of channel data out there. So people think they know the answer based on the channel data out there. And I've seen it like posted on Twitter. It looks really good. They're probably going to beat. So maybe it runs ahead of the report. I'm not sure. But look, you got this strong support here at like 96. I would even say the bottom of all these candles are supports too, like 98.99. The bottom of this candle, 96.87 or so, also support. So this is, I think, a good one to get on pullbacks. I'm looking forward to a good earnings report next week. And that brings us to the end. We killed LNTH yesterday. If you were with us yesterday with that re-rating, I said $91 to $96 was the calculated re-rating value, and it made a move to new all-time highs. So that was the prediction, worked out great. And with that, I think we're going to talk. Talk. We do have a target here at the 200 DMA after that earnings report, 94 cents. And they have enough money. They have enough money to get profitability. Okay. And that'll be it. Let's just check the news flow to see if we missed anything here in the last, while I was doing the show. Let's scroll down to 9 a.m. Actually, let's do 8:55 a.m. Bunch of news, huh? All right, we got coverage on LNTH, so we just talked about that, $130. Blink Charging teams up with the Amerifleet Solutions, probably preventative maintenance. That doesn't sound too important. We got target on COM. We got initiation on Exact Sciences. LuckD's business update. We'll keep track of that. We've interviewed the CEO of LuckD before. That might be something there. And then we got COM again, and that's it. All right, so good, guys. I hope he gave you some actionable trade ideas today as we explain the story behind the trade. And I'll see you later. Stay tuned. We'll do a post-market wrap later today. Thanks, everyone. Have a good weekend.